Hello, everyone. My name is Kevin Drover, and I'm President and CEO of Aurcana Silver Corporation. We're obviously a silver company. We have two projects. Both are located in the United States in stable jurisdictions. Both are fully permitted for immediate production. The Revenue Virginius mine, located in Colorado, in southwest Colorado, is nearest to production. We are currently moving toward production in the third quarter right now. We've closed a $28 million debt facility with McCurrier. It's a 5-year facility, 1-year grace period, prepayable at any time after the first 12 months. We also have the Shafter Silver Project in Texas. It is at a PEA level. It still needs some infill drilling and needs a feasibility study, so some technical work is warranted there. We're looking at beginning our technical work, and matter of fact, we've already started. But we're still 18 to 24 months away from really making a decision on the Shafter project at this stage. But it has a mill on site, a 1,500 ton a day mill. As I said, it's fully permitted, tailings facilities, roads, power. Everything is there. So given the price of silver in the $27 range as the time of recording this, it looks like a very promising project. The Revenue Virginius mine is the closest to production. As I said, it will go into production in the third quarter of this year. We have our full management team in place. We have about 110 workers that are our workers, and an additional 20 to 30 contractors on site. It's a precious metals mine. It's primary silver with some gold, but also lead and zinc. We make two products, a lead and a zinc product. Silver and gold go with the lead concentrate, and of course, zinc to a lesser degree make up a portion of the revenue. Feasibility study was done on this project in 2018 by SRK Engineering out of Denver. We updated that feasibility study internally in 2020. Nothing much really changed. Capital costs went down slightly, and operating costs went up slightly. We're very low cost to production. We're less than $8 an ounce. We have very strong cash flow. The feasibility study was done at $18.50 silver. Given where we are today at $27, obviously we're much more robust. The mine has a tremendous amount of infrastructure in place. There's roads, of course. There's 8,000, 9,000 feet of underground development, water, power, you name it, it's all there. And we have significant upside potential to our current reserves. And I'll tell you a little bit about that as we go here. So the Revenue Virginius mine, which I'm really going to, the only one that I'll have time to talk about here today, is located just outside of Ouray, Colorado. It's about a 7-hour drive or a 30-minute plane ride from Denver itself. From Aurcana's perspective, we've got 274 million shares outstanding. Fully diluted, we're 394. We've got 84 million warrants, all of which are in the money. There's an additional 33 million warrants that are out at $1.25 that we recently issued. We have a cash balance of $49 million US in the bank, more than sufficient to see us through to production. The feasibility study itself was done, as I said, by SRK Engineering. We have a 30 million ounce measured and indicated resource at 30 ounces per ton, and a proven and probable reserve of 21 million ounces at 37 ounces per ton. NPV, as you can see, is pretty robust at $18.50, and here's the price deck that was used in the feasibility study: 75 million NPV and a 71% IRR. If you took at $27 where we are today, our NPV would be closer to 180 million, and IRR be close to 150 million. So extremely robust project. It is a narrow vein, so it's a little bit different than people might be used to. The mill is located underground. We're up at 10,600 feet. This is the crushing gallery here. This is the grinding area. This is the flotation. A few of the things that we're doing here is we're expanding the flotation circuit. The mill is actually capable of doing right around 500 tons a day. Our feasibility is done at 270 tons per day, so about half the production. So we do have room for organic growth here, and we hope to be able to move the tonnage up fairly quickly from that 270 tons a day where we will start up to closer to 400 to 500. It's really a matter of just bringing additional stopes online. A layout of the surface area. This is up at 10,600 feet above sea level. The tailings area is right here. It's dry stack tails, best available technology. Passive water treatment system. This has recently been upgraded and is now in full operation. The mill is located underground right in this area right here. The future of the mine lies in the veins that we have on our property here that we own. We own actually 9 veins, all of which have been past producers. Our main focus is on the Virginius vein, which is this one here, and we own 16,000 feet of the Virginius vein. But our majority of our resources and reserves that we have right now on our books are located only on about 4,000 feet of that 16,000 feet. So we're open to the north and we're open to the south here. The gray area you see right here is area that was mined out between the 1870s and 1914, I believe. They took 25 million ounces out of here at a grade of in excess of 60 ounces per ton. We're intending to mine the purple and the pink. That's what's in our reserve and our mine plan. Although the green area right here, we couldn't put this in the mine plan simply because we couldn't get a drill hole in it. It's very hard to drill from surface. But we suspect that we will be mining this as we come up. And our intention is to be mining in this area up here first. This is where the highest grades are. And we would go down to this area here secondly. We have tremendous potential on the Virginius vein to the north, as I said, and to the south back here. We took a good hard look at this, put a mine plan to this area. And it looks like from what we can see today and based on the information that we have, and we have all of the old information from the mining days when this was mined out, we think that we can get 25 million ounces out of here at a grade of about, we use the average grade of about 37 ounces per ton. But the cost of that would be about $1 an ounce from an exploration perspective. And to the north here, once we're up, we're putting 3 raises in. Number one raise is for men and materials and utilities, and the other two and three one is for ore coming down, and one is for waste coming down. Once we're up here and we have our levels developed, we'll be able to drift on the vein out here very easily. And we suspect that this is going to be the quickest part of our future exploration is going to be here to the north. This out here is a little more costly. And we'll be focusing on going to the north once we're up here and in operation itself. The area that we're in the San Juan Mountains is areas that have had thousands of mines in the past. Some of them have been, of course, the Revenue Virginius mine, which operated from the 1870s to the mid 1914, something like that. Camp Bird mine operated over 100 years. Sunnyside was over 100 years. Silver Lake's over 100 years. Newmont's Idorado mine ran 120 years. They shut it down, not because they ran out of ore, but because they didn't. It was mostly base metals at that time and some silver, but they wanted to focus on gold. So it's a really, really good address, and there's some of these areas here that are quite intriguing for us, and could be very useful bolt-ons to the Virginius mine. For instance, the Ruby Trust mine is a past producer. It produced in excess of 1 ounce per ton, was a direct ship mine. Right now, they've got a resource on this of about a ½ ounce per ton. We've already picked up the Bluegrass claim. Orvis claims are extensions of some of our claims, and the Kent Bird mine is this pink area right here that has a couple of tailings ponds that is of interest to us. So, from a go-forward perspective, we've got, we can increase our mine life. We have opportunity here to bolt on some of these other areas around, and I think the future looks very good for us. So thank you very much.